Number 1. Real estate. We all know that inflation has been rising. The Consumer Price Index, or CPI, in the United States hit an all-time high of 299.17 points in January of 2023. Yet real estate has historically been a good inflation hedge, with property values rising or even ahead of inflation rates. Did you know that as of January 2022, the national average rent had risen by 15.57% over the previous year and again by 2.37% in January 2023? This surely means it provides property owners with a consistent return on investment, right? So with each rental property you purchase, you can create more revenue to invest in new properties, extending your investment portfolio. Number 2. Farmland. Farmland is a frequently overlooked asset with much potential for anyone looking for consistent income streams. One of the primary advantages of farmland is that it provides a hedge against inflation. Farmland appreciates as inflation rates rise, making it an excellent investment for those looking to protect their wealth. It's worth going for instead of keeping extra cash in your hands. The world population is expected to reach 9.7 billion by 2050. This will increase the demand for food, increasing the demand for farmland. Also, because the land is a limited resource, its value will rise over time. Investors who want to invest directly in farmland must conduct extensive research to select the best location to tenant. They can also invest in farmland through a REIT, or a crowdsourcing platform. These options allow investors to diversify their portfolios while reaping the benefits of farmland's potential returns without the hassle of direct ownership. Number 3. Stocks. Stocks can be an excellent strategy since they provide two types of protection. Stocks pay dividends, providing investors with a steady income stream. Companies can deliver more significant dividends to shareholders as they grow and raise their net revenues, ensuring investors have higher cash flows. Second, stocks have a lengthy history of increasing in value in the long term. Investors can protect themselves from the diminishing purchasing power of money caused by inflation by diversifying their stock portfolios. Inflation is a global phenomenon, with the average global inflation rate hovering around 6.6% in recent years. Over the last 2 decades, investors who held onto a varied portfolio of stocks have dramatically increased their wealth, with some equities rising by more than 10,000% in the last 20 years. Consider investing in stocks instead of keeping cash. Indeed, it will help you safeguard your money from inflation while giving you potential long-term gain. Number 4. Foreign currencies. Investing in foreign currencies can be a wise alternative to keeping cash on hand. Let's discover why. While the US dollar is widely accepted, it can be a risky investment due to fluctuations caused by global economic factors. On the other hand, investing in a currency with less volatility can help stabilize your investment portfolio. For example, the Swiss franc has historically been known for its stability. Aside from providing stability, investing in foreign currencies can also serve as an inflation hedge. When inflation rises, a currency's purchasing power fails. However, by investing in a foreign currency with a lower inflation rate, you can potentially protect the purchasing power of your investment. You can make an informed investment decision if you understand the currency's market volatility better. Number 5. Non-fungible tokens, or NFTs. Non-fungible tokens, or NFTs, allow you to hedge against inflation by investing in digital art, music, and virtual real estate. Did you know that the Merge is still the most expensive NFT ever sold as of 2023? Purchased for $91.8 million in December of 2021, makes it the most costly NFT ever sold. NFTs are a one-of-a-kind digital asset that cannot be duplicated and are stored on a blockchain for security and transparency. Furthermore, as demand grows, the value of NFTs has the potential to rise. So if you're interested in investing in NFTs, research and invest wisely to reap enormous profits while hedging against inflation. Number 6. Precious metals. Investing in precious metals and gemstones has long been popular, with gold and silver even serving as currency in ancient times. Gold and silver prices have steadily risen in recent years, with silver nearly tripling in value in the last year alone. Investing in rarer precious metals, such as platinum and rhodium, can also be profitable, with rhodium selling for more than $9,750 per ounce. Diamonds, emeralds, rubies, and sapphires are also viable investments. However, it is essential to remember that the value of these assets can be affected by fluctuations in supply and demand. Furthermore, When traditional currencies lose value, the value of precious metals rises, so gemstones can act as an excellent inflation hedge. Number 7. Luxury items. Luxury items, like high-end watches and designer handbags, are better than cash assets. Luxury goods have grown in popularity in recent years. The luxury goods market is expected to earn $354.8 billion US in revenue by 2023. The market will likely develop at a compound annual growth rate, or CAGR, of 3.38% between 2023 and 2028. Luxury objects' unique and limited nature contributes significantly to their value. For example, a rare vintage watch from a well-known brand can fetch millions of dollars at auction, whereas an Hermes Birkin bag can fetch hundreds of thousands of dollars. Investing in luxury items allows you to enjoy not only the aesthetic and craftsmanship of the product, but also the potential financial gains from its increasing value. Unlike cash, which can lose value due to inflation, luxury items tend to increase in value over time. Number 8. Art. Art is not only a beautiful form of expression. Art connects us to the past, present, and future and represents our society's values and beliefs. Investing in art means preserving not only its monetary value, but also its cultural significance. Do you know that the global art industry will be worth $64 billion by 2026? It indeed highlights the growing interest in investing in art. Unlike cash, which loses value over time due to inflation, art tends to retain or even increase in value. Furthermore, investing in art can benefit portfolio diversification by allowing you to spread across different asset classes. However, the value of art is highly subjective and can fluctuate depending on various factors such as market trends, collector demand, and the artist's personal life. Before investing in a work of art, it is critical to conduct extensive research. Number 9. Vintage cars. Investing in vintage cars can be an exciting and rewarding experience. It's preferable to cash because it provides a tangible asset that can be enjoyed while potentially growing in value. Vintage automobiles have a distinct and fascinating history, each with its own story. Vintage cars can be profitable due to their limited quantity and uniqueness. The value of vintage automobiles rises alongside their demand. Do you know that the 1955 Mercedes-Benz 300 SLR Uhlenaut Coupe was sold at a recent auction conducted at the Mercedes-Benz Museum in Stuttgart to a private buyer who paid the winning offer of $143 million? Investing in vintage cars requires market knowledge and careful consideration of the vehicle's history, condition, and authenticity. However, it can be a lucrative investment, providing financial and personal fulfillment if done correctly. Number 10. Raw materials and commodities. Investing in raw materials and commodities can protect against inflation and economic uncertainty, making it a better option than holding cash. Raw materials and commodities provide an opportunity to invest in the fundamental building blocks of the global economy, which can be a more stable long-term investment than volatile financial instruments. Silver, for example, is used in various industries such as electronics, solar panels, and medical devices, and has historically performed well during economic downturns. Lithium, used in batteries for electric vehicles and smartphones, has seen an increase in demand in recent years and is expected to continue. Similarly, agricultural commodities such as soybeans and wheat are consistently in demand and can provide investors with passive income. However, it's important to note that investing in commodities requires a thorough understanding of market dynamics, supply and demand, and geopolitical factors that can influence prices. Number 11. Digital assets. Investing in digital assets presents an exciting opportunity for those looking for a cash alternative. Unlike cash, which can lose value over time due to inflation, digital assets have the potential for infinite scalability, which means they can be sold for profit multiple times. Musicians, for example, can make a lot of money by writing a hit song once and selling it an infinite number of times. Songs like Gangnam Style and All I Want for Christmas Is You have earned millions of dollars in revenue through various channels such as merchandise, concerts, and licensing. Similarly, digital course writers and designers can earn income by selling their courses multiple times to different audiences, so it's clear why it makes them a better investment option than cash. Creating successful digital assets requires significant effort and resources. If you're interested in investing in digital assets, you should conduct extensive research, identify market needs and trends, and seek out expert advice to improve your chances of success. Number 12. Cryptocurrencies. Cryptocurrencies have the potential for high returns, making them a better option than holding cash. The significant part is that the underlying blockchain technology is becoming more advanced and secure, providing a transparent and dependable method of storing and transferring funds. Cryptocurrencies like Bitcoin and Ethereum have skyrocketed in value, with some investors profiting handsomely. It should be noted, however, that the cryptocurrency market can be volatile and subject to significant fluctuations. You should calculate the risks before making any decisions. Number 13. Equipment. Investing in high-quality equipment rather than keeping cash in hand can increase efficiency and profitability in various fields. The right tools can not only help you complete tasks more quickly and accurately, but they can also help you stand out from the crowd. For example, having advanced equipment such as excavators and bulldozers in the construction industry can allow faster and more efficient project completion, resulting in increased profits. Similarly, having access to cutting-edge entertainment technology, such as a top-of-the-line sound system, can give you an advantage in delivering high-quality performances and attracting more clients. Number 14. Patent. Do you know that the potential return on patents can be huge? The value of patented technology is estimated to be worth more than $1 trillion per year globally. Rather than keeping your money in cash, investing in patents can be a smart move to protect your ideas and potentially earn a significant return on investment. Yeah, we mean it. Patents have protected some of the world's most successful inventions, from the telephone to the internet, and have made their creators extremely wealthy. Not just that, but even the statistics support what we're saying. The demand for patents is growing, with a historic high of 417,922 patent applications the previous year. Patents mean you are the original creator of a product or idea and grant you the sole right to profit from it. Any company that wants to use your concept must pay you a licensing fee or face legal ramifications, including expensive court battles. Number 15. Trademark. Trademarks have become even more critical in today's highly competitive business environment. The rise of e-commerce in global markets makes it easier for others to exploit your intellectual property. So by investing in trademarks, you can protect your brand, generate revenue, and position yourself for long-term growth and profitability. Thus, trademarks are a better investment than cash because they have potential for significant financial returns and long-term success. Trademark ownership gives you a distinct advantage in the business world, allowing you to establish a strong brand identity while protecting your intellectual property. It can prevent others from exploiting your brand's identity and reputation, ensuring you benefit from your hard work and investment. Furthermore, trademarks can be a great source of income through licensing agreements. It may shock you that companies frequently pay significant sums to use other people's trademarks, and the value of a single phrase or symbol can be worth millions of dollars. Michael Buffer's "Let's Get Ready to Rumble" and Nike's "Just Do It" are two examples of trademark phrases that have become cultural touchstones and generate significant profits for their owners. If you liked this video, please subscribe to our channel, The Growth Mindset, and give it a thumbs up to help us create more high-quality content.